en S&P Global. Kenneth, thank you so much for being here in Negocios Televisión.
You're very welcome.
Kenneth, Bank of England decided to hike rates in 25 basis points. However, it was not unanimous, and 3 members of the committee wanted to raise rates in 50 basis points. Kenneth, why 25 and not 20 basis points?
Well, I think the decision for the moment for the majority of members is to be cautious. They're trying to balance obvious concerns about the state of the economy with the priority for the Bank of England, which is to try and keep inflation under control. So we know that all members of the Monetary Policy Committee continue to favour increasing interest rates, even though the economy has been contracting. It's still a minority view to move more quickly. I suspect when we get to the next policy discussion around the new set of forecasts of the Bank of England, the number of votes in favour of a 50 basis point increase may actually go up for a number of different reasons, partly because the quicker the Bank of England takes this action, perhaps the less high interest rates have to go in the end. And also we're seeing some downward pressure on the currency, which normally might be helpful for the UK economy, but in this case it's not, because it's actually increasing imported inflationary pressures, and with central banks elsewhere, particularly in the US, stepping up the pace of their rate increases, there might be some pressure on the Bank of England to do the same.
Bank of England worried of driving the British economy into a recession?
Well, inevitably they are, and that will have an impact on inflation in the end. I mean, the weaker the UK economy is, the more slack in the labour market, the less worried they would be about a rise in wages and a potential wage price spiral. But the difficulty the Bank of England faces is the difficulty all central banks facing at the moment. The inflation rate is exceptionally high. In the UK, it's close to double digits and will go into double digits later this year when the energy cap is increased in October. And they can't do anything about some of the influences on prices, thinking about Russia, Ukraine related commodity price increases or supply chain difficulties globally. But what they can do is try and address the second round effects. And those second round effects in particular that they're focused on are inflation expectations, which have been drifting above the Bank of England's 2% target, and also pay pressures. And the analysis that the Bank of England presented at the same time as concluding its policy meeting suggested that pay pressures are continuing to pick up more quickly than they had anticipated. So unfortunately, although the economy is weak, the Bank of England's job is to keep inflation stable over the medium term. And that probably means we're going to get more of the same, and things will get worse before they get better.
Bank of England forecasted a contraction of the economy of 0.3% in the second quarter of this year and inflation of 11% by October. Isn't that the Bank of England recognizing that they are not being able to fight against stagnation?
Yeah, again, it's a problem that the Bank of England faces and all the central banks face. But we have to be realistic in terms of what they can achieve and how quickly they can achieve it. It's going to take time to bring inflation down. The Bank of England acknowledges that. But the key in all this is to make sure that what doesn't happen is we end up in a wage price spiral which continues over a number of years. We saw that in the 1970s. We know how damaging that was. So the intention for the central banks currently is to try and nip that in the bud, to try and deal with this problem early by raising rates as fast as they can without causing undue economic or financial stress. But it's not going to change the situation quickly. We know the UK economy faces numerous headwinds, lots of similar headwinds that other economies are facing, but also some particular issues to do with household finances here in the UK, some legacy effects also from Brexit. And so the economy is going to struggle. But the Bank of England's priority is to make sure that inflation 2-3 years down the line is in line with their 2% target. And they're going to continue to have to raise interest rates to try and deliver on that.
The Bank of England, Kenneth, was the first central bank to begin raising rates. However, it is one of the economies with the worst forecasts. Why is that? What is the Bank of England doing wrong?
Well, I think all central banks have faced the same problem, and all forecasters have faced the same problem. That, we got used to there being low inflation rates, and therefore these very high current inflation rates have come as a shock. I mean, if you think about why we're seeing these high inflation rates, it's partly supply factors. As I mentioned, commodity price increases reflecting particular problems, and also supply chain disruptions. It's also demand factors, because economies have rebounded very strongly after COVID-19, which was a good thing. But of course, that's led to some bottlenecks. And the Bank of England, like other central banks, is now realizing that what they hoped was a transitory period of inflation is turning into something more persistent. And therefore, they're having to try to deal with that. But, these forecast surprises in terms of inflation are not unique to central banks. For all forecasters, we've all had to acknowledge that we underestimated the potential price pressures that were coming through, not just in terms of the magnitude of those, but also the breadth of those. It's not just commodity prices that have been a problem here. We're also seeing a wide range of price increases in goods and increasingly in services as well.
Mm-hmm. They said today that they would act forcefully if they see signs that inflationary pressures are becoming persistent. What can the Bank of England do if it decides to act forcefully? Does that mean, for example, raising rates in 75 or even 100 basis points?
Well, certainly that's a possibility that the Bank of England could move by more than 25 basis points. Its rate increases so far have been quite gradual, but clearly that's one of the options it has at its disposal. And I think you could read the comments today as a signal that they are considering moving by more than 25 basis points, certainly when they do their next forecast. And like I said, that's partly because they're seeing other central banks move more aggressively, and therefore they might be fearing that sterling would continue to fall and exacerbate the inflationary problems that they're currently facing. And as you mentioned earlier, inflation is very high. They're going to have to do something about that, and that probably requires a more aggressive pace of policy tightening. Now, that's a big problem in the short term, but one of the positives from that would be hopefully it means that interest rates don't have to go as high and stay as high for as long a period if they move more quickly now.
Mm-hmm. Kenneth Wattret, VP and Chief European Economist at S&P Global. Thank you so much, and sorry for the delay.
Thank you.
Bueno, pues nos decía efectivamente que, bueno, pues el Banco